Financial Argument. Follow us on YouTube.
We don't have a lot of time with our guest today. His next call is with which is one of the wealthiest men in all of America. Hedge funds and private family offices all over the world want to hear from him right now. And we have him here today to give us his thoughts on what is really happening behind the scenes and where he is putting his money right now. Our guest is a New York Times bestseller, fund manager, and founder of Katusa Research. Marin Katusa, thank you for joining us.
Oh, it's a pleasure, Dan.
Marin, I'm so glad to have you on the show. I've got to imagine I'm the only guy who's getting this interview right now, which is a great privilege for us and my subscribers. Brexit, we're coming off the hills. The vote was just announced hours ago. We're also coming off of the hills of the Fed not raising rates, Trump taking over the Republican Party. Marin, you've traveled over 100 countries. What does Brexit mean for the world? And this doesn't seem to be just an isolated incident in what's going on in Europe.
You know, there's no doubt, and I made the joke last night to Doug Casey, we talk every day, and I said, it's funny that a nation that has invaded 90% or over 90% of the world is basically voting against the immigration on the EU. That's what it really came down to. That was in the UK. Look, this is the beginning of a mass movement where everyone knows in London, in the financial sector, everyone voted to stay, but it's the outskirts. It's the small towns. They're sick of it. And, what's next? Well, is it, Portugal's just as messed up. So is there a Portugal? Italy's messed up. Is there an Italy? You look at Finland. Is it Finnish? The Czechs, are they checked out? There's so many issues going on with the EU. And then you got the Japanese markets, the Chinese markets. Everyone knows that these currencies, because what's going on, they're going to depreciate their currencies. There's a race to the bottom. And if you owned, for example, British pounds, you just lost more in one day than at any point in the last 100 years. How do you protect yourself on this global movement? Dan, I've been talking about it for a long time, about a deflationary market. The beauty of gold is it is the ultimate currency. Look what happened to gold overnight. It's just a protection. It's the ultimate insurance on the currencies. And it's not just guys like Doug Casey talking about it. You got Stanley Druckenmiller, George Soros. You got some of the smartest guys in the industry talking about this. And especially if you have a large net worth, or even if you're a teacher looking to hedge yourself, you need to have gold exposure. Now, there's many ways to have gold exposure. You can hold physical gold. There's risks there. Make sure nobody knows where it is because it can get stolen. You can buy ETFs. You can buy producers. But if you're looking for the maximum upside, then you look at what Doug Casey's built his net worth on, and that's in the speculation in the junior resource exploration sector. There's no other sector on the planet as volatile, as explosive as the junior resource sector. Hence, we're just at the beginning of what's going on. We've seen it, in Russia with the currency devaluations. Those who held gold did really well. Now you saw what happened to the British pound. Look what's going to happen in China with their depreciation currency. Everyone is waking up to the fact that gold is a great place to be. And never in the last 30 years has so few people owned gold, relatively speaking. And there's over $10 trillion in sovereign bonds that are negative. We're like in a new economic model. And people are just coming to where gold is going to go. Gold's going a lot higher from where we are today.
Marin, you are the first guy, maybe the only guy actually in 2011 to really be out there publicly calling a top, telling people to get, start cutting back, take gains, that, we were in some sort of not bubble necessarily, but definitely the top. As far as I know, you may be the only guy on record out there. This is just beginning. A lot of people are experiencing gains that they've never experienced. Many of these gold stocks are up 100%, 200, 300%. You stated on the last time we talked, every piece of crap out there is getting financed. I feel like now more than ever before, people should really, really, really focus on picks that you have, and just, high quality things that Doug's doing, that maybe Rick Rule is doing, because it feels like the sharks are out there. And if you could just give us a behind the scenes of what's going on, when you said every piece of crap out there is getting financed, can you explain to people that, out of these gold stocks that they typically buy or see on newsletters or advertisements, there aren't that many of them that are worth anything, right?
Well, exactly. 1 in 3,000 projects ever becomes an economic mine. And look, I want to make this very clear. In any newsletter world or any sector, anyone with a website or a platform thinks they're an expert. Make sure you're following people who have skin in the game, okay? Which means they're actually buying and holding what they own. Secondly, follow the smart money. And in the resource sector, some hedge fund that had success in the tech sector, maybe they'll have success in the resource sector, but they're going to have to figure it out. It's probably better to follow the gurus like a Rick Rule, who's earned his scars in the resource sector. Trust me, Rick hasn't always, or myself or Doug Casey, we've made mistakes. We've learned the hard way. We've had to pay for our tuition in the resource sector. We know who the good guys are, who the bad guys are. So be very careful about it. And there's another factor. Just because some geologist says this or that, they're a geologist. Doesn't mean they know how to make money in the stock market or know what mines. They're not an engineer. So make sure you know what type of specific investment advice you're taking and what is their track record or expertise. So I look at people. Real estate, it's all about location. Well, the resource sector is all about make sure you invest in the best people who have the experience in the sector that they're working in, and more importantly, that they have skin in the game, that they've written a big check in the company that you own. Why would I ever buy a stock where management have just options? I want this stock to be their life. Rick Rule taught me a thing years ago. Invest in someone who's willing to ruin their life for 5 to 10 years to make a fortune. That's what I'm looking for.
I like that a lot. Gold's having a stellar year. We've blown through the $1,300 level here in the last 24 hours. Marin, you have suggested Brazil Resources, BRI. I spoke to Doug Casey just the other day before he had his trip. I was kind of blown away. Doug, who never gives an individual stock pick, had suggested that he thought it was a back up the truck moment for Brazil Resources. He thought it was going over $10 plus, and that was with gold at around 1,200-1,300. Now, realistically, we're looking at gold plus, 1,400-1,500 in 2016. When you're experiencing this, and when you're looking at a company like Brazil Resources, which your fund owns, do you add to the position here, or do you start taking some off the table because it is up? This year, it's into the 250 to 300% range.
Look, I said from day one, if you go back to when it was a much lower price, I'm not buying a position like this to make a double or a triple. If you look where Rick Rule or Doug Casey have made their fortunes, or myself, it's because you bet with the best people, go long and strong, and I'm looking for a 10 to 20 bagger. And I know it sounds insane, and there's a lot of risks to it, but when someone like Doug Casey says that, people should listen. I'll just tell you what I've been doing with our fund, and Doug Casey and myself are the two largest shareholders in the fund. Every year we have added to our position in BRI. And that's what I'm doing. I'm not going to tell other people what to do, but I'm telling you that I'm not selling the stock. Why would I sell a stock that has probably the best management team of any junior exploration company, whose track record of cutting brilliant deals? Amir has invested millions of dollars of his own money, and he's a guy that's going to ruin his life and sacrifice to make a fortune over the next 5 to 10 years. And I could hitch onto that train. That's something I'm willing to run with. And we're at the early stages. I know it sounds great. Look how much these stocks have moved from, $1,150 gold to $1,300 gold. What do you think is going to happen when gold goes to $1,600, $1,700, $1,800 gold? These stocks are going to go much higher. Now, if you don't believe gold's going higher, that's a different story. Get out of the markets. But look around what's going on. How can you not think that gold is going a hell of a lot higher? I do, Doug does, Rick does, some of the smartest money managers in the world do. I believe gold is going to go a lot higher from here, and we are at the early stages. And the gains we've seen thus far are going to be nothing compared to what we're going to see over the next few years.
Marin, last question. The Federal Reserve for, 18 months to 2 years told us that rate hikes were coming. 6 months ago, they said 4 rate hikes were coming over the next year and a half. All this hype about rate hikes, and they kicked the can. You know, you've been one of the few out there who's been talking about a real deflationary threat here. Do you think that the U.S. will see normalized rates even in the next decade? Or is this going to be like Japan's central bank, where realistically 2025, maybe even 2030, we're still here at this low rate level?
See, Dan, let's really focus in on some key words you said. Normalized. We're in a new normal. The world has never seen this before. We're over 10 trillion. Like, that's a huge number. I want everyone to just sit down and write out what $10 trillion looks like. So my point here is that the U.S. can't just do what it wants to do. We are in such a connected market where the Japanese are buying U.S. bonds and the Chinese are buying U.S. bonds. It's so interconnected that the U.S. Fed has no choice but to pay attention to what's going on with Brexit and the EU and what's next with the EU, and what's going on in Japan and what's going on in China. So it's regardless of what the Fed wants to do, they have to deal with the realities of what they can do. And the beauty of all this is everyone, even the former Fed, Alan Greenspan, we spoke at a conference together. He even himself said gold's going a lot higher. If the former Fed chair said that, you need to pay attention. This is, in my career, I have never seen a better setup for gold, and it doesn't depend on just China. Remember, the last commodities bull cycle was all about the emerging markets. This gold market is about the catastrophe of the global Fed markets and its effect of the QE and the deflationary forces. And the beauty of gold is, over the last 40 years, everyone said buy gold for the inflationary metrics, and that is true. But gold is even a better setup in a deflationary market because it's a protection from what is going to happen to these currencies. And you've seen what's happened with the euro. You've seen what's happened with the pound. Gold is a great place to be, and people need to educate themselves on it.
Marin Katusa of KatusaResearch.com. Please check his site out. You can get all of his thoughts almost on a weekly basis. And he's even put out a few trades there, and some people who made some pretty good money. I get a lot of the feedback from our subscribers. And of course, I think there are many people who listen to this show who've made a fortune from just listening to Marin's interviews. Marin, thank you so much for joining us today. I really appreciate your time.
Take care, Dan.